Oh, there are so many yummy vegetarian options out there. You could try like lentil soup, veggie burgers, tofu stir fry. The possibilities are endless. You ever get that feeling, that kind of sinking feeling when you look at your pay stub? You see the big number, and then you see the number that actually hits your bank account, and you wonder, where did it all go? Well, you're not alone. For so many Canadians, it feels like a huge chunk of your hard-earned money just vanishes into taxes. Today, we're going to pull back the curtain on this tax squeeze and, way more importantly, talk about a really powerful way you can start to take back control. All right, so here's our game plan. First, we'll dig into the everyday tax squeeze to really understand the problem. Then, we'll look at the small business solution. After that, we'll uncover what I like to call your new tax superpowers. Of course, we have to talk about playing by the rules. Then, we'll walk through a real-life practical case study, and we'll wrap it all up with your next move. So, let's jump right in. Section 1, the everyday tax squeeze. Let's get to the heart of why that paycheck can feel so much smaller than it should. Let's put a face to this, okay? Meet David. Now, David's doing pretty well for himself. He earns 75 grand a year to support his family. But by the time his employer takes off income tax, CPP, EI, the whole shebang, he's left with about $5,000 a month. And that's barely enough to cover everything. Does that story sound familiar? David's story is the story of millions of Canadians who feel stuck in a system that takes a big bite right from the source. Now, David's situation, it's not just bad luck. It's often the result of a few specific things. This list here is fantastic because it shows 10 common traps people fall into that cause them to overpay their taxes. As I mention a few of these, just ask yourself, hey, is that me? Getting most of your income from just one job, having one spouse who makes way more than the other, struggling to keep good records, or just not doing any tax planning until April rolls around. These are the kinds of built-in disadvantages that typical employees face. Okay, so that's the reality of the squeeze. And yeah, it is frustrating. But here's the good news. There is another way. So let's shift gears and start talking about the solution, a path to what's called tax efficiency. And it starts with the small business. And this isn't just about finding some clever loophole. It really begins with a major shift in how you think about your money. I love this quote from the philosopher William James. You can alter your lives by altering your attitudes of mind. The moment you start seeing yourself as a business owner, even a tiny one, your entire relationship with your finances and with the tax system completely changes. So what is this tax efficiency thing we're talking about anyway? Well, first, let's be super clear. This is not tax evasion. It's about playing the game by the rules, but playing it smart. It's about having control over when you claim income and expenses. It's the power to legally split income with family members to lower your whole household's tax bill. And here's the big one, it's the chance to deduct the business part of your everyday costs, like your car, your home office, and your cell phone. And that brings us to the absolute core idea of this whole explainer. It's the massive difference in financial power between being an employee and being a business owner. Let's call them what they are, your new tax superpowers. Just look at the two worlds on this slide. On the left, you're an employee. You're taxed on every single dollar you earn, your gross income. And your options for deductions, they're incredibly limited. But look at the right side. As a business owner, you're not taxed on what you bring in, you're taxed on your profit. That's your revenue minus all your legitimate expenses. All of a sudden, a piece of your car payment, your phone bill, your home office, and that includes a chunk of your rent or mortgage interest, your heat, your electricity, it can all become a tool to lower your taxable income. And think about it. Business lunches, supplies, software, courses you take, it's all potentially deductible. You go from a rigid system to a flexible one where you're calling the shots. Now, all this freedom, it sounds amazing, right? But with great power comes a great responsibility. This is not the Wild West. To make this work, you absolutely 100% have to play by the rules. So let's look at the 4 pillars of compliance that you just can't skip. Okay, these are non-negotiables, so listen up. Number 1, it has to be a real commercial activity. The CRA needs to see you're actually trying to make a profit, not just funding a hobby. Number 2, you need a source of income, or at least the real potential for one. You can't just spend money. Number 3, document everything. And I mean everything. If you ever get audited, the burden of proof is on you, so your records are your best friend. And finally, number 4, think about your family as one financial team. This way you can maximize all the savings and deductions available to the whole unit. All right, enough with the theory. It's one thing to talk about all these rules and concepts, but what does this look like in the real world, like on an actual tax return? Let's meet Linda Baker and break down exactly how she got a big refund. So here's a tax summary for Linda. And Linda's probably a lot like many of you. She has a regular job, but she decided to start a small business on the side. We're going to go through these numbers step by step to see how the magic happens. First things first, her baseline. From her day job, Linda earned a salary of $25,000. That's her T4 income. It's her starting point. Simple enough. Okay, now this is where it gets really interesting. In its first year, Linda's new business had more expenses than it had revenue. That created a business loss of $4,320. Now that might sound bad, but for a new business, this is totally normal. And for our strategy, this loss is the absolute key. So remember how a normal job works? All year long, Linda's boss was taking tax off her paychecks, assuming she was going to owe tax on the full 25 grand. In total, they'd already sent $3,575 to the government for her. And here it is, the punchline. That business loss of over $4,000 gets subtracted directly from her $25,000 employment income. It basically just erases a big chunk of her taxable income for the year. So all that tax her employer sent in, it was way too much. And boom, the result? She gets a refund of $3,136. Her startup costs literally generated a tax refund from the government. And the best part? You can stack these strategies. This doesn't stop here. Look at what happens later on when Linda's income grows to $50,000 a year. On top of her business deductions, she can also contribute to an RRSP and save even more. A pretty modest $2,500 contribution would save her another $763 in taxes. This is how you start building layers of financial control. So, we've talked about the problem. We've gone over the really powerful solution, and we've seen it work in a real-world example. The big question now is, what's your next move? Let's talk about what you can do to empower your own financial future. Look, just watching this is a fantastic first step, but knowledge isn't power until you actually use it. So instead of walking into a tax advisor's office and just saying, can you save me some money? Go in armed with these 5 killer questions. Know your tax rate. Ask if you can go back and fix past mistakes. Talk about RRSPs, TFSAs, and income splitting. And maybe most importantly, ask about the best system for tracking everything. This right here, this is your action plan. Let me just leave you with this one last thought. Over the course of your entire life, taxes will be your single biggest expense. I mean it. It's more than your house, more than your cars, more than anything. So the only real question left is, are you going to continue to be a passive employee in your own financial life? Or are you ready to step up and become the CEO of your own tax bill?